And now, unbiased and independent, here is your Manhattan Weekly Market Report with Noah and John from UrbanDigs. Hello, everybody. This is Noah and John, and we are from UrbanDigs. It's Friday, so you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at supply. It is finally starting to tick up as that listing season kicks in and ramps up. It's at 5,931 listings. Show me that chart.
Yeah, this is the first increase we've seen in overall supply. You have to go back until October to find one, and that's up nearly 2%. Here we are close to 6,000 listings, and we're just above the level we were at 2022. So again, you're right. The listing season looks like it has apparently begun here, Noah.
Yeah, we're supposed to get about 765 listings coming on the market in January. And when I look at that 30-day pace, I know that we're below it. We'll take a look later on. Let's not forget, Johnny, first the stuff comes on, those are the waves, and then behind it, then the stuff goes to contract. So that pending sales measure, that measure of demand, that's probably not going to start to tick up until we get well into the active season. For now, it's at 2,251. Johnny, show me that chart.
Yeah, and we are down. I mean, we've been basically seeing progressive paper cut down moves in this measure, really going back to May, and this is no exception here. We're down another 0.2% if you want to pencil that in at home. And, that's still looking on the weak side compared to where we were. We're actually below the beginning of 2020's numbers, hovering in there, but still below. But again, you're right. First they come out, then they get signed. So we're looking ahead to maybe some increases here, but not right now.
Yeah, we got to see where it goes. We got to see where it goes. I mean, by May, we're supposed to be over 1,000 contracts signed a month. I think actually 1,100 by May. And chances are we're going to come in low, right? I mean, I have a strange gut feeling that inventory is going to come in light. And I have a strange feeling that demand is going to stay light. And you look at the market pulse, which takes a look at both supply and demand. And you kind of get a visual representation of what we've been through. I think we're in the buy zone. We're in the buy zone, and I don't expect us to get out of this buy zone. I mean, I expect this to go down a little bit first as the listings come on, and then it's going to go up as the listings get signed to contracts. And this is what I'm really looking for, is where do we go in this measure at the peak of the active season? I mean, we're so used to this pumping higher, at least to the high end of the neutral zone or seller's market. And I wonder if that's going to be the case. I expect buyers to have a bit of a prolonged buy side window. And right now you're in it. Whether or not you see it, you're in it. Let's switch to those weeklies, Johnny, see if there's any clues there. I'm looking at new listings in the last 7 days, 289. That's ticking up. Johnny, show me that chart.
Yeah, it's up. It's up 18%, versus last week. And Noah, one of the points that you brought up when we were talking about overall supply was what that monthly pace is, and we're looking at if I'm looking at that cumulative number the cumulative number of supply that we've had added this year, it stands around 745 or so, and that's actually still down almost 16%. Compared to where we were at this time last year. This is one of the charts that if you're a subscriber, you'll see in the charts we're going to put out for a second. So on a weekly level, it's up, but overall, the number of listings that have been put into this market this year is still down.
Yeah, that's the key. On a relative basis, we're coming in light. We're coming in light. I mean, we're ticking up, which is what's supposed to happen, but, we're supposed to be at a higher level. And my guess is that sellers, if they don't feel like they're going to get their bid, they're going to hold off on listings. And that's one of these attributes of this market that we're operating in, is that we have tight inventory, and that's muting the depth. It's muting the depth of this down cycle. It's all about the depth and duration of this down cycle. We're already in about the 7th month of this down cycle, but the depth of this down cycle has been restricted by this low inventory. Let's take a look at contract sign. Again, this is still low, 116 on a weekly basis. Johnny, show me that chart.
Yeah, the contract side numbers sort of remain in the doldrums here, and you can kind of see those bars for 2023 are on the low end compared to where they were in 2020, 2021, even 2022. So we're remaining right around the 2019 levels, and it was not the greatest year. It's kind of a typical year, a little bit on the slower side. So if that's what we're shaping up for, it's not bad. It's certainly not great, though. And again, we talk about that cumulative number of contracts signed. It's standing right now about close to 400. But the interesting thing, Noah, is that relative level, and that's down 35% compared to where we were last year. So again, contract sign is still on the low end here.
Yeah, I'm on the UrbanDigs ticker. I look at the 1 month, I look at this number right here. That is what is all about. This is your liquidity indicator, and this is supposed to be at 765. That's our average for January. We got about 11 days to do it. I know it's going to go up. I just don't know if it's going to reach that 765. And that's the question. And if we continue to see deal volume light, that means that sellers that have to sell, which I don't think we have a lot of those in this market. They're there, but they're not in mass. Sellers that have to sell in an illiquid market are going to find a wider bid-ask spread. And that's what is an attribute of an illiquid market. Higher listing discounts, higher days on market. And if you price it wrong, the penalty will be more severe. But I take a look, John, at the sellers that are out there. And, I think about 25%, 30% of the inventory has had a price cut, something like that. But I look at what the average price cut level is and what that trend is. And that's your red line. That's your red line. That's the median price cut percentage. And it's hovering around 4.8. Okay. So sellers out there, that's kind of what the market's doing. More importantly, those blue bars, the number of price cuts that's going on a monthly basis. This number's down. It's down, John. It's not going up. So, and I look at this number, it's stable. It's not going, it's up from the peak. It's up from early last year, which is down here. No sellers were cutting prices in. They were going to contract. But it's not anywhere that you would think is a troubled, panic, desperate market with surging liquidity, and they're just looking to get out.
Yeah, and that's the thing, because we were just talking about how pending sales has been a paper cut down since May, and we're just talking about how weekly contract signs is remaining low. Yet when you look at, you think, oh gosh, sellers out there must be panicked. You're not seeing it here, Noah. You're seeing less price cuts than you would normally see. And if you switch over to that weekly tab, right? This is kind of what we would normally see. So the price cut level here so far in 2023 is pretty much right on par with 2021. Now that's granted, with the markets are completely different, but you would expect that sort of slope to be different too, and it's not. It's a very interesting turn of events here.
Yeah, when you look at the weekly average of those price reductions coming in, we're kind of on par with 2021, and we're nowhere near 2020 levels. And you could see how we were all going down towards the end of last year. So, this is a very intriguing market, to say the least. We're going to have to stay on top of it. Again, we're in it. We're in it. It's all about depth and duration at this point, and we will keep you posted on both those items as we go through this. Until then, John Walkup, thank you for pulling up all those charts. I am Noah Rosenblatt. We're both from UrbanDigs. Don't forget, you guys got questions, we got answers. Please visit our forum right down here. And if you want any of the charts that John whipped up today, it'll be right over here in just a few seconds. And if anybody is interested in classes on how to utilize UrbanDigs and the technology behind it and the charts and the messaging and the strategies, please email support@urbandigs.com. We do classes every Tuesday and Wednesday at 11 o'clock for 30 minutes on varying topics. We would love you to join. Other than that, this has been your weekly Manhattan Market Update. We'll catch you next time.